What's going on, traders? Welcome back to my YouTube channel. My name's Antonio. Most of you might know me on Instagram as Ants Analysis. And if you're not already subscribed to this channel, make sure you hit that subscribe button so you don't miss any more content. In today's video, I'm going to be showing you exactly how I do my top-down analysis within the markets. And as always, if you want to join a community filled with over 10,000 active traders, the link to our free Discord server will be in the description below. Now let's not waste any more time. Let's jump straight into the video. Okay guys, so here we are on GBPUSD. We're on the monthly time frame and we're going to be breaking down our top-down analysis, okay? So starting on the monthly time frame, this is where we really like to get a feel for the overall direction of the market. Basically the market sentiment, just have a basic understanding of just this currency pair in general, what it's done in the history, key levels. And on this time frame, I'm not really looking at specific, analysis like Fibonacci's or, just anything like that. I'm really just getting a basic understanding, really basic. And the only thing I really look for on this time frame is just psychological levels. I'm looking for these levels in the market, these significant levels where price is using it as support, resistance, just in case, to see where price is coming. And to start with, I'm just going to tell you something. When I'm doing this analysis, I keep it really simple. Like as an example, I don't care about this level up here. Okay, yes, that's a strong resistance level in the market, but if you look at where price is right now, 1.29, wherever it is down here, why should I care? And why should I even analyze this level right here? Why should I have that there? Price, it's not going to reach that level for a very long time. Well, I don't think so anyway, who knows? But I don't need to have that analysis there. Another thing, just touching on top-down analysis, I only really do the monthly and the weekly time frames. It only really changes every couple weeks or even months, because you never really get that much big of a movement unless there's like a news event or a huge shift in market structure or a psychological level gets broken. There's no need to go back and do your top-down analysis all the way from the weekly, monthly time frames. You just stay on the 4 hour, stay on the hourly, daily, every week. You don't need to restart your charts every week. And just top-down analysis is what you'd normally do on the weekend, on a Saturday or Sunday, just before the markets open, getting ready for the week essentially. But what I am going to do is I'm going to break down where I would put my psychological levels within this chart. So first thing we can notice is price recently rejected this strong support in the market, okay? And we actually broke it, okay? Price formed a new all-time low last October, breaking lows from 1985, okay? So a new low that we haven't reached before, which is obviously insane. But it's significant, right? Because it has happened recently and we have just rejected it, okay? So that's something to keep into consideration. So we like to use this tool here. This tool is the horizontal ray. And what we'd like to do is we like to put it on psychological levels. Okay, so for this, we're going to just put it at 1.1. Keep it really simple. Again, it doesn't matter because we're not at that level right now. And I'll talk about it later, but we don't really want to be putting it all the way at the bottom. And we'll talk about that in a second, okay? But this is a significant level in the market at 1.1. Where else can we see a significant level, okay? If I just highlight these areas here, we have a nice support there. Nice support here, support, and then that flipped, and then we used it as a resistance and a resistance again. This is a strong level in the market where price is using it as a key level of significance, okay? Been using it as a support all these years, and then we finally broke through it in 2016, and ever since then we have been using this level as a resistance, okay? So that is a significant level within the market, okay? I'll delete all those circles for now, and we're going to put another horizontal ray through there, and this significant psychological level is at 1.4. okay, so we'll put that in and we'll edit that to 1.4. okay, we're keeping these time frames, we're keeping it as psychological levels. This level here as well, I can see, I'll draw it through here, we have a strong level of resistance that was then used as support, and then we used it as resistance again. So again, this is, I'm not expecting price to reach this level for a while. If it does, so we don't really need to put it in, but I'm going to put it in here for this video because why not? That level is at around 1.7 psychological level, okay? Nice and rounded numbers, 1.7, there we go, okay? So that's all we need to do on this time frame. We don't really need to examine anything else. The trend, the overall kind of trend of this on this time frame, we can see it's pretty rangy. Like no matter what is going on, we can take advantage of buys and sells. There's no real sentiment within this market. We can see for the last maybe since August 2008, sorry, we have just been moving to the downside, but I do believe this has changed now since we've come into this support level. Okay, so that's the key thing we're taking away from the monthly time frame. Okay, we're taking into consideration that we have just recently touched this level of support, and then we'll zoom in and we can potentially see that from this time frame, where is price going to? Where is the next level of resistance that price on this higher time frame could be going to? Okay, and that is 1.4. So we have to keep that in the back of our minds when we're trading on the lower time frames. Where is price going? Well, it looks like price is going to 1.4. So if you're looking for buy positions, how can that help? Well, if you're in buy positions, it means you can have much larger take profit levels. You can not even have a take profit and just trail your stop loss consistently up with price. It can really help with your position management and your trade management. And it can also help if you're going against the trend. Let's say if you are selling GBPUSD, which is completely fine on the lower time frames, but you might just want to be cautious and have in the back of your mind that, price is bullish and price is moving towards 1.4. So that might cause you to have, smaller take profits, get in and out of the market quicker, because at any given time, price might reverse and head up to 1.4. Okay, so that's a key thing to note on the monthly time frame. We're now going to jump down to the weekly time frame, and this is where we get just a more in-depth view of the monthly time frame. Okay, so there's not really much else to add. We're not going to draw on trend lines or anything like that. We're going to go down to the daily for that, but this just gets a more in-depth view of that. So looking at this level, this is the important part. Okay, looking at this level that we had, 1.4, you can see here how price has breached and gone above that. Okay, so what most people would normally do is they'd go, okay, this is the level of resistance. Okay, so they go, oh, that's actually the level of resistance, not 1.4, that's the level of resistance. But if you're buying the market, right, and price, let's say, comes up to this level of 1.4, you don't want to be greedy and you don't want to go, oh, but no, this is the high up there. You don't want to do that. As price is approaching 1.4, that's where you want to be getting out of the market, because it's a psychological level. You don't know what could happen potentially at that level. Price might slow down. You can see it's being used as resistance here. You might just get, a lot of choppy market conditions. As you approach these psychological levels, what you tend to see happen is, you move up very fast, but then as you start to approach it, price will then start to move very, to the side. And you don't want to be in the market when that happens. You just want to get in, you want to get out, and you don't want to be overextended and being greedy within the market. So yeah, there's nothing really more to say on the weekly time frame for this pair in particular. If it was another currency pair, or if I did see anything on a weekly time frame, I definitely would put it in. But in this instance, I'm just gonna leave it for now, and you'll see why when I jump down to the daily time frame. Okay, so we're now on a daily time frame, and to be honest, this is where I'll start looking for trends and maybe some chart patterns, and just look at the highs and the lows and just see what's going on. I'm going to leave this is the section I'm interested. Okay, what you see on my chart is what I'm interested in. I'm not going to go back all the way here and start analyzing the market. It just doesn't make sense. You want to just stay focused on what's going on right now and the previous trends, see where price flipped, and then that's where you kind of analyze the market. So first and foremost, we can say that price has started from here. We've been downtrending. We've got 3 touches, 1, 2, 3, and then price broke out of that. Okay, there's nothing more to say. We don't even need to draw a trend line on, but it's just to kind of visually represent, okay, price was downtrending, we then broke out, we're now in bullish market structure. And that's basically it really. And then what we can do from here as well is start to analyze potential chart patterns. Okay, very vaguely, it's not going to always be clean, but for me, what can I see clearly here? I can clearly see that price did form an inverted head and shoulders pattern. Okay, strong level there, where this could potentially be the left shoulder, this can potentially be the right shoulder, and then obviously when we had that support down there, that could be the head. Okay, it doesn't have to be pretty, it doesn't have to be textbook, but all this is telling us as traders is that price has shifted from bearish market structure to bullish market structure. And then what comes with a head and shoulders pattern? Well, we've got to draw in our neckline, of course. So we can say that through here is our neckline within the market, and we can draw that level, and we can even see how price broke through resistance and pulled back and retested the neckline as a support. Okay, so what else will I look at the daily time frame? I'm looking at where price is going, because it's all good saying that 1.4 is our next target, but we don't want to be greedy. That's an insane amount of pips and levels to get to that, to get up to 1.4. So I use the daily now to potentially look left and see if there's any other key levels in the market where we need to be careful of, and if we are buying the market, then we need to be closing out there just in case price reverses. And I want to bring your attention to this point right here, okay? Because that is where this wave of sellers stepped into the market, okay? We had a huge drop. So there's definitely interest and orders sat at this level from where sellers stepped into the market, okay? We had a huge push down to the downside, okay? Strong momentum in the market from this level. So with that being said, I'm going to start drawing in zones. I'm going to have a zone from here and I'm going to drag it across, because this is going to be a level where if I do take buy positions, I'm going to want to be taking profits at that level, okay? So remember, we still have 1.4 as our target and where we're expecting price to be, but we want to have other levels within the market that we want to be careful of just in case price was to reject, okay? That doesn't mean, we might enter now and take profits here, but then when price breaks through, we'll catch another position, so on and so forth. There's plenty of positions to enter before we reach 1.4. We don't just want one position and then hold it to 1.4. We want to be getting in, getting out, and going again. Okay, so that's it for the daily, right? We've started to draw in some chart patterns. We've identified the trend. We know we're bullish. We're moving up, heading to 1.4, but we've also identified a key level within the market. So key thing to notice, guys, I'm keeping it real simple, okay? Whilst we're on these higher time frames, we're keeping it as simple as possible. Let's jump down to the 4 hour, okay? The 4 hour is the next zone that I would come into. And this is where we start to develop more analysis within the markets. So we can see our most previous level of resistance here. That got used as a support as well. So we broke through this level of resistance. I'm going to put it in somewhere like there. Again, doesn't have to be clean because we're not even there right now. In fact, I'm just going to move it down just for ease. But yeah, we had this level of resistance. We got broken through, we pulled back, and we retested it as a support. Now, we're on a 4 hour time frame. This is where I'm going to start to draw in some more chart patterns, okay? We're only interested in what you see on my screen right now, okay? So we have our kind of target zone now. We have where prices previously retested as resistance. We understand we're bullish. And now we're going to start drawing on some chart patterns and, really start adding a bit more technical analysis to this. So what can I see? You guys who are watching this video can probably see it already, but what chart pattern can you see within the market? Okay, I'll give it a couple seconds for any of you that can see any vague chart patterns that you can see taking place after we reach this support level. Okay, I'll start drawing it in and you can see if you can guess it whilst I'm drawing it in. Okay. My favorite chart pattern, for those of you who know me, the inverse head and shoulders, okay? We have the left shoulder here, we have the head, and we have the right shoulder. And again, all this is telling us as traders, don't even have to really draw this in, but it's just telling us that price has shifted from bearish market structure to bullish market structure. Now, that's it for the 4 hour, okay? We've seen that, we're moving up. Now what we're going to do, we're going to jump down to the 1 hour time frame. Again, we're going to keep the same like part of our charts on the screen, but just more in depth now, okay? So a lot of you always ask me, what's the best time frame to trade? Like all time frames, you will see analysis, you will see chart patterns. It's just a more in-depth version, okay? So notice how we're on the 1 hour now. It's just more in depth. So we definitely have a resistance level up here because we've seen this is a resistance and we've seen a resistance here. So what we're going to do is we're going to draw in a zone there because that's clearly our most recent high point within the market. Okay. Now, we've obviously broken through this level, continuously forming higher highs and higher lows. Price is definitely uptrending. We could potentially, start to draw in a vague trend. I don't really like using trend lines, but why not? We can just clearly visually represent that price is uptrending. Now, what am I expecting to happen? What normally happens? What kind of rule does the markets follow? If price is uptrending, we like to see bullish impulsive moves, and then that's going to be followed by a pullback correctively, and then that's going to be followed by a continuation, okay? And it's called impulse, correction, continuation. And where are we looking to enter the market? We're looking to enter the market at the end of the correction. Okay, we're not looking to enter after an impulsive move, because what follows an impulsive move? A correction. We want to be getting in at the end of the correction, or worst case scenario, on the start of the impulsive move as much as we can when we're entering our scale in positions. So with that being said, what are we expecting to take place? I'm expecting to see a pullback of some sort. Now, where am I expecting to see a pullback to? This is where we add our Fibonacci retracement tool to add a confluence into our trading. So the way we do that, we grab our Fib tool from the toolbar here. This is called Fib retracement. We drag it from our swing low to our swing high. And we can see that the 50% Fibonacci retracement level lines up perfectly with our most recent level of resistance. Okay, if I just double tap this, if we was to draw on our 61.8 and 78.6, we can see how the 61.8 and the 78.6 don't really line up with anything. There's no real level of support, resistance. In this instance, the 50% is just the perfect level to be targeting, okay? So it goes to show that this level of resistance can be used as support. And what we're looking for price to do is we're looking for price to correct to the downside correctively. And then we're looking for that next impulsive move up to our zone that we drew on from our daily time frame. And how would we manage our trade? I would add my next fib level, which is the 61.8. And I would look to enter the market around the 50%. I would put my stops below this, the 50%. I would look to put my stops below the 61.8%, just in case. You know, we have to have some kind of risk management. So this just gives us reasoning to put our stops below this level. And then what we would do is we would look to target this zone, which is a nice 1 to 8. Okay, this is definitely more than enough to be entering this position. With that being said, let's say price did pull back to this zone. Let me just draw it in quickly. If we were to enter there, that doesn't mean we don't have opportunities to enter the market again on scale win positions and really maximize our profits on the way up. Okay, this is just the first case and best case scenario to enter the market. We might not have our entry signal here. We might miss the trade, but just because we miss the trade doesn't mean we can't enter more positions on the way up like this. Okay, and then we can really maximize our profits whilst limiting our risks. Okay, so with that being said, you know, we just look up, there's so much room. We had this 1.4 level, which is absolutely fine. You know, if you want to place this trade, this is a 1 to 8. If you want to really try and stretch yourself and get a 1 to 39 risk to reward, it's unrealistic that you'll reach that level. But if you wanted to not have a take profit at this level down here and you really wanted to try and extend yourself, that's absolutely fine. But I'm just telling you from my perspective, a 1 to 8 is more than enough. I'm going to get in, get out up here. But for some people, you know, you understand, if you have an understanding and reasoning and a calculated idea that price could go up to 1.4, then if you didn't want to set a take profit and you wanted to just trail your stops into profit and, you know, let it go as high as it can, then absolutely fine. But I'm just telling you from my standpoint, I would just get out for a 1 to 8 and try and scale in and just try and, you know, make as much as possible before this level, because who knows, from this zone we might get a huge impulse away, and then the last thing you want is for all your profits to deteriorate, get stopped out at break even, and it's just be a waste of time. You know, you want to be securing profits off the table as much as possible. You don't want to be just being greedy and stuff like that. For me, I like to get in and get out as much as possible, realize profits rather than trying to be greedy. But let me draw this on again before I end this. This is what I will be looking for with GBPUSD, a nice pullback and then a continuation back up to around the 1.308 zone. Okay, but that is my top down analysis on GBPUSD, all the way working down from the monthly time frame down to the 1 hour time frame, guys. Well, that's the end of the video, guys. I hope you enjoyed it, and remember to leave a like and a comment. Let me know your thoughts in the comment section below. We're almost at 5K subscribers, so if you haven't already, make sure you hit that subscribe button so you don't miss any more content. Have a good rest of your week, and I'll see you in the next video.